Can you? I don't want to go back under. Can you go grab my cell phone out of my office, or have Aaron grab it?
I got you.
Nate, you need anything besides that water?
I'm good.
You need a tulip,
What?
some flowers.
No, I'm good, man. I had some espresso on the way over, so I am good. I was looking for the list of questions you're going to ask me.
Did we send one?
Just kidding.
I didn't know if that's on silent.
I was gonna say, did we send them? Because I don't get involved in that.
Oh, he
so.
sent me some stuff, but no.
All right. Actually, I don't remember them. I'm sure it's in my.
Yeah, I see that thing. Hang on. I think it's my white balance.
The Rabicas Dutch be hosting Nate's finalizing time will update his team at PC, Google Docs. Hard Money with Dutch Mendenhall guest outline.
This is quite the setup you guys got.
We're trying.
Yeah, but they didn't do a good job of. Not these guys. They didn't do a good job of giving me info
I
before
know.
we.
I tried checking the calendar invite today, and I didn't.
Like they don't have your bio in here. They don't have what you want to promote. They don't have name of. These are all things they normally typically do with our podcast.
I
So
I
it's
filled
weird.
out some. It may have been my fault. I think I got everything back a week ago. To them.
No, it should be sitting in my calendar. All right. Company you want to be shared is not Alden, right? Or it is Alden. It's Nate Goad.
Yeah, I mean, I'm kind of my
How
own
do you?
deal.
That's what I thought, right?
Yeah.
So
So all this is my, kind of my back office support, but I don't really promote myself anyway. So like, I don't have a product.
yeah, but you're a wealth advisor.
Yeah, financial planner.
A what?
Financial planner.
Financial planner.
Yeah.
Okay. All right.
So I'm working on that piece.
I mean, I can help you with all that.
Yeah.
Like I can fly you out to California. I mean, we could put together a series of videos and a website and everything else. If you want all that stuff done, my guys, we can just do that stuff in our sleep.
Okay, awesome.
We can just take care of it. And if it's, you want, different things with it, right? If you have any kind of just general outline, or if you just want me to say, Nate, here's what a great, website is, and here's 3 versions, and which one do you like the most?
Yeah.
We can put that stuff together easy.
Oh man, that'd be amazing.
I mean, I have a 40-person marketing team,
Okay.
and your tribe, loyal friend, right? That's the kind of stuff
That's awesome.
we excel at. So
I would love to, because
we can get you, record a series of videos. We can, get your wardrobe and do a series of headshots and knock that stuff out.
okay.
So
Yeah, I'd appreciate that.
I wasn't aware that you were wanting or you needed that.
I think this journey for me is like, what do I want to build? And I think I'm more clearly like lasering in on that. So then it comes to like, how do you tell a story?
Mm-hmm.
So I've not really done any of that up to this point.
We have one of the best. I mean, a former financial planner, teacher of how to present yourself as a expert, as a thought leader.
Yeah.
2 of the best in the world here in Tampa.
Okay.
So you had Ted McGrath, who is one-man show, like storytelling, how to represent yourself, how to build an information brand, right? And then Dave Van Hoos and his company Speaking Empire, they're both like super close friends of mine.
Okay.
And they're both like, I've run portions of both of their businesses for many years before I stepped away from running other info marketers' businesses. So, and they're both right here in Tampa. So
Okay.
they probably both have seminars and conferences and different things you could run through too. So
Yeah,
you'll end up
that's
dropping a chunk of change with them, but every dime will be,
Yeah.
I know it'll be worth it. So
Yeah.
with where you're already at in your business life.
Well, and what I'm looking at doing too is I'm having some conversations around like kind of building a infrastructure around like to say like, hey, if I turn on the spigot, I've got the ability to capture it.
So Guys, whenever we start these casual conversations with guys, I would always just turn the recording on.
Okay.
Okay, that way if we want to, that way if there's something here, I don't think there is anything here that we necessarily need to cut or clip,
Okay.
you know, as a part of this podcast. But I mean, lots of times the casual conversations is where,
And we can, yeah.
which you guys know, I'm just reminding you.
Well,
Okay.
we plan on rolling.
Right.
You guys ready for official start? All right. 3, 2, 1.
Well, what's up, everybody? So I got Nate Goad here, who's a personal friend, and he's kind of like a go-to guy that people with wealth, people with money go to and say, what do I do? How do I invest? Where do I put my money? He's a financial advisor, wealth advisor, right? But more than a financial and wealth advisor, I think Nate's unique niche, right, is that he understands what people should do with money, and from an alternative standpoint, right? Not just mainstream Wall Street, hey, go throw your money in the 10 funds and hope, that you're going to get a return or ride that. Like, he invests in real estate, he invests in other alternative investments, and he invests in what he asks or tells his people to invest in, which I think makes him unique. And something I fell in love with was the fact that that's kind of our motto, right? We invest in anything we ask our people to invest in. So, Nate, people come to you. The investors you've brought to our REIT and our portal have been, great members of our tribe and community. So, this is a little different because you're not a person who likes to sell yourself.
Yeah.
You're not a person who likes, to brand yourself and everything else. You just have this deep network and this deep knowledge of wealth. And so let's dive in and tell people, anything else you'd tell them about yourself.
Yeah. Well, I want to say thank you for having me. It means a lot. It's been great to get to know you as a friend. And I guess that's one of the things that I've really valued as a relationship, and understanding where capital is going, but also who are making the decisions. And so I really enjoyed getting to know you as a friend. So who am I? As you said, Nate, I've been in the investment industry for about 15 years. And I guess my journey really started, I would say, in college, where I wanted to understand investments more for myself. And so that just started with like, hey, getting to know it, reading books, personal finance. And now for me, like the second generation, it's something I'm teaching my kids. So I'm a dad. I've got a 10-year-old, 8-year-old, 5-year-old, 3-year-old, and one more coming in January. So life is full.
They're all blonde-haired and pretty.
They get it from their mom. So yes, very, very fortunate, and they've got good height and athletic genes from their mom as well. So, but it's been something about 15 years in the industry. I'm a certified financial planner. What I say is it's really my role to help people understand anything that can impact their wealth. And so many people just focus on investments. Investments is one piece of it, but I look at things like titling and entity structuring and taxes. Like, that's all stuff where I feel I can differentiate myself because I can really quantify that. When it comes to the stock market, like, the stock market's going to do what the stock market's going to do, and I don't feel it's really easy to add value from one person to the next. But as you get into alternatives, as you get into some of those creative strategies, I really feel like that's an area where I can move the needle a lot. And for me, 15 years in the industry, coming up on 2 years being on my own. And so this is all stuff I've had to figure out myself. What does it look like to go from a W-2 income where you've got that steady paycheck to, like, I'm eating what I kill. And then all the tax planning, all the structuring, like, what does that all look like? So I'm kind of walking through that, and then I've got a group of people that I'm helping along the way as well.
Yeah, it's really cool. That journey of where you're at, right, in college is such a conversation for people, right? When you were talking about, you're already looking at investing, and you're looking at, my kids are generational, right, when it comes to wealth as well, but very, very different in the sense that, like, when I was in college, like, money was the problem, right? Like, being poor was the problem. And so like growing up poor, growing up, in dysfunction, right? I didn't know what credit score was, right? I didn't have a credit card till I was, in my mid to late 20s, And so I didn't, and my acceleration had to be, obviously really fast to be, who I am today. Now, making money is generational for me, right? My parents were good at making money, but as far as wealth, it's different. And so talk a little bit about the concept of wealth and kind of what that means to you, and maybe I'll share the same.
Yeah, and I mean, I come from a similar background as you. My dad actually was a pastor. And so, you know, I can remember growing up, like my parents were good from the fact of like talking about give, save, spend. But, you know, saving, like I teach my kids around investing or growing money. So it's very, very different. So it's all stuff that I had to learn. And one of the most kind of impactful moments in my life is I can remember being probably 9 or 10 years old. And I was at the baseball field. We had one car. I grew up one of 5 kids. And I can remember I was waiting for my parents to pick me up, and they were late because 5 kids, 1 vehicle, all over the place. And I remember sitting there. I just had this desire. I was like, man, I want to make money. And I want to make money so I can take care of those I love. So I can also be very generous and giving. And I look back like to that 8, 9, 10-year-old kid, and like there are these seeds of wealth that were kind of placed in me there that have, you know, now grown for the last 30 years. You know, I guess my view on wealth is it's so much more than money. You know, people look at sometimes and define it purely in monetary terms. I think that's a component of it. I was actually having this conversation yesterday with a friend who's building a business, and I said, like, for me, I've made strategic decisions that I want to have time freedom and I want to spend a lot of time with my kids. And so I've created kind of my business in a way that is a piece of it. So for me, I would say like wealth would be looking at it spiritually. It would be looking at, you know, health. It'd be looking at time freedom, and money would be a component of it. But I think it's so much more than just money. And I feel like I've seen so many people that have done very, very well financially, but it's cost them something, or, you know, you look at kind of the next generation and there's issues there. And so for me, I guess that perspective is like wealth and money is a part, but it's so much more broad.
I mean, for some people that don't, like, I don't know that the word they don't care isn't necessarily the right way to describe it, but like, what's the point for me of building tremendous wealth if you screw up your kids? Right. But then I also go back to we're all going to screw up our kids. Yeah. Right. So it's an interesting dynamic, you know, for me, finding that balance. Right before I had my kids, while I was building, you know, my businesses, right, I actually went and coached college baseball for 2 years. Right. And was, you know, leaving the office at 1 o'clock every day and going and coaching baseball. And then suddenly I had 2 kids, and my wife's like, okay, you can't run, you know, an empire or a business and coach college baseball, you know. And now, though, I see myself replacing a lot of that time with work versus time and energy with my children. And so finding that, you know, unique balance and seeking that presence with my kids is incredibly important. You know, it's fascinating because, you know, for me, you know, you grew up in a Christian household, right? And so there's definitely some rules when it comes to money. There's some balances when it comes to money. In my household, it was, you know, we never had one car. You know, my dad, you know, was partial owner in a used dealership, so we might have had 5 cars, right, that cycled in and out, but constantly broke down, right? But they couldn't keep the dealership because of their addictions, right? And that's just one of, you know, many business. So there was always that teaching of, well, here's how you know, advertise a business, or here's how you make money in business, here's how you do this. But there was never that other side to the equation, because it's only half the equation is making the money is half of it, but the other half is keeping it. And then putting it to work. For me, when I look at wealth, we all have incomes, but to me, wealth is the income that's made from your non-work. And so for me, like, even as my income goes up, that's actually less important to me in some ways than the money I make from my non-work. And the passivity of investments, the passivity of my real estate, passivity of different things. And so for me, my true wealth is built upon non-effort, and that's kind of an interesting way of looking at it.
Yeah. No, and that really resonates. I mean, when you're talking around that, I think of like The Richest Man of Babylon.
One of my favorite books.
Principles of like enlisting part of your money to work for you, and what does that look like as far as growing. And I mean, quite frankly, like this career switch for me, from again W-2 into doing your own thing, like I've looked at it and like I really wrestled with like, what am I building? And I feel like maybe 6 months ago I had this image just come into mind with like a hub and 10 spokes, and each of those spokes would be a different revenue stream, and a lot of those are passive. And so again, like if I want to generate X a month in passive income from a portfolio of real estate, like how much do I have to have deployed to do that?
Well, I
Okay.
want to slow down for everybody. So if nobody caught that, right? He said an image came to him. And so, as for me, that's something important to understand is that lots of times people don't listen to themselves. They don't listen to the world. They don't know how to read themselves. They don't know how to read the world, right? And part of that's discernment. A part of that's understanding, path and destiny and generation. And so, like, I just want to talk about that for a minute because I do float tanks, I do deprivation tanks, I do meditation, right? Things to, like if I'm going 90 miles an hour for 2 weeks straight and I haven't had that downtime, I'm literally spending time at the wrong way because there's only one thing that can make. I say if I'm not producing $100,000 an hour for my team and my employees, then somebody's going to lose a job, and then there is also no future to the company, right? Because it has to go from $100,000 to $1 million an hour for what I'm building, but that only comes from the mind, right? I mean, systems, processes, but none of those things exist without the thought of it, and so I hunker down to that. What do you do to create that state?
Yeah, I mean, I think for me a shift around kind of getting into that space has just been a realization. Again, this comes from my faith. I look at, in Scripture it talks about like the Good Shepherd and like we're sheep, and so having this understanding that like the shepherd is constantly speaking to me and starting from the default, like it's easy to hear the shepherd's voice. And so I think for me, it was first a mindset of realizing like I have all this stuff that's constantly going in my mind. If I stop and create space, a lot of times like this stuff is there and I can grab it and realize, but starting from that default of, God is constantly speaking to me and I need to, one, pay attention, and two, I need to grab it and figure out what do I do with it. I think that was kind of the default for me. I think practically what that looks like is actually creating space. And so again, like there's so much.
And that's dangerous though, right? Because when you create space, people want to fill the void.
Yeah.
And they want to fill the space, right? And so like you can create the space and suddenly it's TV, or you could create the space and suddenly it could be addictions, right? Different types of addictions. Because a lot of people will, like, instead of creating space, they escape. Right? And there's in the lines, where the unhealthy path, and it can even be a healthy creation of space, whether it's exercise of other things, but to really take things to another level, you got to create the space and leave the space.
Yes.
And there's for me where the challenge comes in sometimes.
Well, and I think there's like a filtering of like, hey, where is my time going? I mean, time is a finite resource, and so again, like we all have the same 24 hours. How am I spending that? And I think for me, it's just a realization that like there's things that aren't good things or not bad things. Are they taking me in a direction where they want to go? And like I'll use this example. Like I'm a type A driven collegiate athlete. Whatever I do, like I want to be the best at. And so what does that look like? All right, if I get some stupid app on my phone, like I want to be number one in the world. And I look back and I'm like, oh my goodness, how much time have I wasted doing something that doesn't matter?
Or money, yeah.
Or money.
Yeah.
And so I think there's kind of a filtering process to
And you'll justify it too.
Yes.
You'll be like, while I'm playing this game, I'm getting better at politics and I'm understanding, dynamics of culture and these different things, and I'm learning how to master these pieces, and you can make those excuses.
Yeah, no.
'Cause I've done that.
So for me, it's been just like kind of filtering and saying like, hey, is this getting me closer to where I want to go as far as father, a husband, a business person, or is this taking me farther? And I'm not saying like, man,
we're not perfect.
Netflix, like all that stuff, like I do all of that, but it's got to be within reason. And so if you just look at statistically how much time people spend in front of the TV, like it's mind blowing to say like, man, we're wasting so much time in our life that we could be doing other stuff.
Now, for me to say that Boardwalk Empire or Sopranos has no influence on me as far as a business person would be, I'd be lying, right? And like there's been different shows over the years, like Billions, right? Suits. There's been different shows over the years for me that I've watched, and Yellowstone, right? I mean, I literally bought my first farm, right? And like a month and a half later, I started watching Yellowstone, and I'm like, man, QRPs, yeah, man, this stuff on, like, this is like some real stuff in farming that I'm learning. But I would say that, you know, people would say as you're building wealth and you're watching TV, you can make it productive. I would say, but we feel guilt. You know, when I'm not working during the day, sometimes I feel guilt. You know, and over the years I had to learn to, you know, put things in space so that I could create that space for myself. So, what are your, as we're on the topic, what are your biggest TV or movie influences when it comes to wealth?
When it comes to wealth,
Or just comes to business, entrepreneurialism,
well, I mean, I think
success.
I think for me, you know, shows like Shark Tank or The Profit, just understanding how businesses work, and seeing. I feel like in this stage of life, I'm able to take structuring of businesses, raising capital, and investor psyche, and understand like the lenses from a bunch of different angles. And so I think for me, like looking at some of those shows, I mean, I think they're just fun, and I didn't really start watching them to say like, hey, my business acumen, I wanna increase, but that just kind of happens. But those have been influential for me as far as like just understanding different types of businesses, and not all businesses are created equal. And again, like what is the purpose? And I'm actually having this conversation with a friend of mine who has built a very large company, probably 200 employees now, and has all these vertical integrations where he's like, I could do this, I could do this, I could do this. Well, at the very start of that entity creation, we're saying like, what's the end game for this? Like, is it to kick off cash? Is it just to, you know, provide you kind of an annuity of income? Are you building this to sell it? And I think depending on what those answers are, and you know, for some of these, they're going to be built to sell, and so we're actually taking it a step further to say like, hey, here's a merger and acquisitions group that sells companies in this industry. Tell us, one, what is going to make it the most valuable, and two, what size it needs to be at to be attractive to the kind of the market that's out there. So I guess those shows have been hugely impactful for me.
There's businesses built to collect assets, i.e. Brad Diversified REIT. There's businesses that are built to collect cash flow. There's businesses that are built to kick off, you know, income. And so there's different types of structures for sure when it comes to company. And then a lot of people are like, well, I'm just a small person. Like I'm opening this business, you know, a print shop, or I'm opening this and I'm just trying to survive, or I'm opening this e-commerce and I'm just trying to survive, right? Yeah. And they don't start thinking that way. But the reason they got into opening a business most of the time in the first place was to have freedom.
Yes.
But they're creating their own jail cell sometimes.
Yeah. Yeah, and you know, I think there's nothing wrong with saying like, hey, this business for me is I'm going to enjoy doing this, and this can provide a lifestyle for my family, and I don't want to grow it large. I think that's okay. And you know, not everyone is called to build the Rad Diversifies of the world, or to build a company that's going to go public. There's a lot that goes into that, and there's a cost associated with that as well. And so, you know, we did a panel recently I was on, and everyone on the panel had moved from kind of corporate America to be an entrepreneur. And I was like, this has all been our path. It's not everyone's path. Like some people, the niche is better. Like, hey, I'm gonna hook my, you know, train to a great company, and I'm gonna push them forward as an employee. And I think that's okay.
That's what I said as a kid.
Yeah.
I said, with all my parents' entrepreneurialism, with all this stuff, I said, I'm gonna find a good company. I'm gonna, you know, be conservative in my actions. I'm gonna, you know, go to school, finish school. I'm gonna work my way up the corporate ladder, and I'm gonna, you know, grind my way through. Because as lots of times I just felt, you know, I just didn't want that life, right? But what I didn't realize is it's like certain things you're born to be, and born to do. Like for me, entrepreneurialism, real estate, like I didn't really, no matter what I tried to do to get away from it, or what I tried to, that's just who I was in my DNA. And I think for different people, there's definitely different paths when it comes to what success is. But wealth doesn't matter whether you're an entrepreneur, which I know you deal with a lot of entrepreneurs, or you're a professional, you know, or you're a person who's trying to figure it out for the first time. It's still, you know, a goal that people attain. One of the things I always say, and I'm curious of what you think is, because it goes different to traditional budgeting, traditional kind of Christian statements and saying is they, and as they'll say, you know, 10%, 10%, 10%, right? And, you know, 10% is, you know, obviously needs to go to savings, and 10% needs to go to investing, and 10% needs to go to, tithing and some of the different rules with that. And I will typically always do the tithing, but then I always believe that the next money has to go into expanding people's ability to earn. And it's something that I think goes contrary to a lot of mindsets, right?
Yeah.
And I think, if somebody tells me they have, $5,000 to their name, and I say, well, if that $5,000 is invested today and 30 years from now, at a 10% return, I said, it's not a lot of money.
Yeah.
But my belief has always been, well, if they can, earn an extra $20,000 a year, or they can earn an extra $30,000, or earn an extra $100,000 a year, now, they can put 20% to work, they can put 30% to work, right? Because for me, I'm putting at least 50% of all my income gets put to work. Yeah. And so it's not, like 10 and 10, it's 50, you're right, 20, and then, we live off 30%, and that's kind of how we look at life. I don't know, how do you balance yours?
I mean, what you said aligns with me. I guess I'll put on my certified financial planner hat for a minute. I would say the one caveat is, like for me, giving is first, and that's the first dollars in. It's just representative.
Always.
To me, like, I've been given this ability to earn. It's not my own ability, and so again, like, to me, like, that's showing, like, okay, well, I'm going to give first, and I also keep all my finances open to, if I feel led to do something, like, okay, well, here's someone in need, like, I want to be able to meet that need, and that's one of the primary reasons I want to have wealth, is to be able to meet needs. Like, I remember what it was like to have groceries show up on our doorstep, and that's how we ate. Like, I've seen that, and so again, I'm like, hey, if I can meet the need for someone, it's huge. I think you also need to have some kind of a base, and that base can be small, just to say, like, hey, call it your rainy day fund, emergency fund, whatever that looks like. Just to say, like, if things hit the fan, like, I don't have to put on a credit card. I don't get behind the 8 ball with that. From there, I have this conversation with entrepreneurs all the time. What they're going to be able to create from reinvesting in their business or building, like, you can't do that through passive real estate. You can't do that through the stock market. The returns that you're going to get from that, it's the biggest earner. Now, the flip side of that is it requires them as well. And so, again, I'm having this conversation with a buddy of mine who's building companies and saying, like, you want to do both. Like, let's put some money that's going to grow passively for you in real estate, and then let's also build up the value of these companies, because, again, what you're going to create from that, from your expertise, skill set, and money you invest, it's going to yield a much higher return. But it's also, you got to do the work.
I mean, so, I went through many different versions or many different phases, right, as an entrepreneur. And I'll tell you, one of the most important things that I learned, and a lot of people, maybe it goes partially to what you're saying, but also partially against what you're saying, is pay yourself, right? And that was a difficult thing for me in the beginning, because in the beginning, I usually, whatever it took me to live was all I lived off of. Yep. And I went through, different phases with my business, and I think, I remember when I was still doing a consultant, and I remember, rise and falls as a consultant, and big clients, and then non-big clients, and those things. And what I came to realize is by paying myself, you kind of become a different person. In the sense, there's a way you approach business, there's a way you approach life, right? And if you're living in survival mode, right, which is just paying yourself enough to survive, you don't make the same kind of decisions as when you're paying yourself enough to live, right? And there's a difference between surviving and living. And I'm not talking about, you rob your business in order to pay yourself, but I am saying you have to pay yourself.
Yeah.
And then a chunk of that money, you can decide what to do with it from there. If you don't do that, I think you set your business up for being dependent on it. And you make different decisions when you're dependent on the business versus the business's best decisions for what's the business, and the business has to pay you. Something I kind of look at as an entrepreneur, and when I started, paying myself and paying my partner Amy, I think it changed a little bit, just some of the dynamics, right? Because you had to, remember too, Amy and I, in our career, we're both used to making, as a headhunter, I was making $20,000 to $30,000 a month. Amy, in her consulting, before we joined, was probably making $20,000 to $30,000 a month, and then I opened my business, and I was probably living off of less than 5,000 a month for a good 2 to 3 years,
Yeah.
right? My business might make $100,000 in a month, but I'm still living off of that sustenance, and maybe there's some good things, with that. It's a little easier when you didn't have kids back then, which now I do, but I don't know. What are some more things that you believe when it comes to that?
Yeah. I mean, I look at it as ratios, and I think habits are so powerful, and that's, I guess, one of the biggest things I see working with people and their money. It's not a head knowledge; it's in a behavior or an action. And so again, like I always say, like investing, wealth management, personal finance is more akin to weight loss than math. Like in our head, we all know how to lose weight. Like don't eat the cheeseburger, put the fries away, go exercise. But the behaviors that come along with that, like cost us something and they're hard to do. Like money is the same way. So I think there's something, no matter how much or how little you're making, like again, back to the richest man in Babylon, paying 10% of that to, wherever that goes, investing or whatnot, but taking that, I think there's something around the habit of doing that. Giving's the same way, paying yourself as well. But I also look at too, like reinvesting in your business. Like sometimes you can slow the growth a little bit to say like, hey, I don't have to go from $100,000 to $1 million of revenue in a year. What if it takes 2 or 3 years? Like again, like I can have less stress on my personal life. I can, spend more time with my kids or whatever to get to that journey. Now, that's a personal decision. And I think sometimes there is a time to kind of put the pedal to the metal and go at a certain pace. But what I see is so many times entrepreneurs go too fast for too long.
They grind till they die.
They grind till they die. Yes, exactly. And what ultimately, okay, well, you created a bigger multiple on your business, but if it costs you your health, if it costs you your sanity, like was it worth it? And
so I like the seasons term, right? And so for me, I'll do a grind season, right? And I'll make different decisions about that, right? And so for me, that makes a big difference when I say, like, for example, I had chosen not, COVID kind of forced it, but I chose not to go around the country and speak and different things. But I felt like recently, I was getting called, like I'm going to go keynote at the crowdfunding week and different things. So I was feeling called, right, to go out and share, our message, also our industry message, which to me is just as important as an alternative REIT, as a non-traded REIT. And I know you dive into alternative investments, and I'll dive it. But I was feeling that call. It was time to go out, and so I said I'm going to give a season to see what that is like for our business or what that's like for my family. But I'm only going to give it a season, and then I'll evaluate after that. And then I know like I'm going to give a season in the spring more to my kids, and so I'm gonna dive deeper into. I'm gonna do run baseball practices with them for they're 5 and 6, by the way, everybody. I'm going to run baseball practices with them for 3 months, and I'm going to do some other athletic and fun things with them, and do some more museums and art stuff with them, and I'm going to dive into that for 3 months. And so I love seasonal stuff for myself. Do you do kind of seasons when you look at your kids and life, or is that not a concept you've dove into much?
I think it's something I'm becoming more aware of, and just again like realizing like it's such a short period where, my kids are at the age they're at, and like to capture the moments. And, we made some intentional decisions over the last couple of years to spend some prolonged time traveling and, call it 3 weeks to a month. And I'll do a little bit of work, but not a lot. I try to be as present as possible. And just a realization of this is a season where 15 years down the road, like that's not going to be an option. And so again, like, is there a cost? Absolutely.
It never comes back.
It never comes back. Is there a cost to my business? Is there revenue that I could have earned? Probably. But I also feel that as my priorities are in the right place, like my work is more productive when I put it in, when I focus on it. And so, I'm very aware of that. Again, the season's like January, new baby comes. And so what does that look like? Man, we're now in a season, I don't say of survival, but, sleepless
anytime
nights.
there's a new baby, you go slightly into survival mode.
Yeah.
So nobody ever told me when I had my kids, and like all these other dads, they never told me the fatigue or the tiredness, right? Even if you're getting your sleep, even if you're getting sleep, you'll feel a fatigue and tiredness and a joy that there's nothing else like it. So
I call it the foggy season, where there's a fog. But you know, again, like just being very intentional around the fact that, like, hey, while there's a baby, there's still 4 other kids, and there's 2 of us, and like, what does that look like to be able to take my foot off the gas, you know, in my role for a period of time, or set up the right structures where it functions, you know, while I'm not there. But yeah, I'm
and
being
so
aware.
while all this is going on, right, wealth has to happen, and that's the conversation, you know, that I talk about for people as well. You know, this life is happening, and while even starting a business is happening, and while different things are happening, right, this wealth has to happen.
Yeah.
And these cycles have to be running continuously, almost like like your subconscious runs in different ways, but with your wealth, it's like your subconscious of money has to be running, and at all times. One of the things I talk about sometimes is time popping. I don't know if you've ever heard that phrase. It's kind of like its ability for time to happen now, right? Versus over this, like lots of times people put things out there that I can accomplish this, or I could get to this, or I could do this, or I could make that happen, or this could be the reality someday, and it's not their actual like now reality.
Yeah.
And so when I think of time popping, I'm thinking about one is it's like what I want to accomplish can be happening now, and versus out in the future or sometime down the road. Or Eckhart Tolle probably calls it, you know, power of now in different ways. But you know, for me, I look at that future as something that's not a reality. And so I look at what is now and the ability to condense down times. Like I start thinking about things that could take people years, but how does that happen in a week, or how does that happen in a day? When you look at your business and stuff, like what kind of things do you want to have? You know, you look at maybe in years but it would be really cool if it was today.
Yeah. Again, to go back to kind of that image that I had of the hub and spokes. For me, that's 10 different revenue streams from different verticals of my business. And I say verticals of my business because it wouldn't even have to be something that I'm doing. Again, passive real estate, like it's as I deploy this, here's a return around that. You know, maybe another spoke is hard money loans. I've got a buddy of mine that I've deployed some capital in crypto. Like those are all things where basically I create the wealth and then deploy it, you know, to do its thing without my needs. So those 10 spokes, I've got kind of an idea around a bunch of them, and they're all at different parts. Like some of them I've already kind of achieved the stated goal, and now it's building the second, the third, the fourth, the fifth, the sixth. Also the realization is like, hey, I can't build 10 things at once. And so as I've started to kind of put pen to paper and plan around that, like the realization is like some of these may be for another season.
Can't be you.
Yes.
And some of them can't be you.
Yeah.
So some of them are for the future, for sure.
But for me, I've very intentionally designed my personal finances and my business to not have to function based on my effort moving forward. Mm-hmm. And again, you know, some of it looks like doing work once and then getting paid for 2, 3, 4, 5 years on that work that's done once. But that's how I've kind of structured things. And again, some of that says I say no to other opportunities that are going to require me now, or that's a different season. But
so just biting down on that for people, right? When you look at what Nate was saying, I think it's an important concept, because there's lots of times in business and life, or what you're going to do in business, there's all these exchanges, right? And you can make an exchange to sell a $10 product, or you can make an exchange to sell a $10,000 product, right? And those are two very, very different things, and both can be successful, but they both have trade-offs. But one of the trade-offs he was talking about right there is, what's an action I can take now? What's something I can do now that's going to pay me for years to come, that I don't have to continuously work towards, versus something that I have to do over and over to get paid. And so as you exchange your time, or you exchange your energy and your effort, making a decision on something that continuously produces, right, can sometimes be more work, but maybe it's not. Maybe it's the same amount of work as something that was going to produce for you once and not continue to produce for you. So as you look at the decisions you're making with your business or your money or your wealth, it's just an important, you know, I think it's a great nugget for people. Alternative investments. I mean, I know this is where you first came to us, right? As your, you know, side chick, you know, when it came to real estate funds you were going to invest in. I'm just kidding. Nate first came to us, and correct me if I'm wrong, because you had some good, you know, some investors who had done well in some real estate funds you had referred them to, but now they were kind of like, well, we want to diversify in real estate, and we need you to find another alternative place to invest in too.
Yeah, and that was part of it. And the other gap that I've seen where RAD meets the niche is for non-accredited. And again, like most of the people that I work with are accredited investors that have a certain level of affluence or net worth, but there's a lot that aren't. And for me,
There's a big range, right, with that, from 0 to $1 million in net worth is a big range, right?
Yes.
People that have a couple $100,000 to invest are still not necessarily accredited investors. Should they have less opportunity than people that are accredited? I don't think so, but there's rules in place for that.
And I agree with you. And you know, my background is I've always been an investment guy. I was never necessarily a real estate investment guy until I actually really looked at it and started to say, wow, I want to actually deploy my own capital here. And this actually is a real good fit for
Before
others.
some trolls on social media start judging me, right? My firm belief is that a person with $1,000 or $100 should have the same opportunities and same vehicles to invest in as a person with $10 million, right? They should be able to make the same kind of returns and have the same kind of paths and avenues. That's our fundamental belief before they start, running in their chat boxes. So go ahead.
And so that was kind of my journey in looking at real estate and tax benefits and income, and stability of value. And part of my journey with my own dollars is, I manage money in the stock market. I've had my own money in the stock market, but just realizing how many variables are out of your control. Like, let's go back to our former president, and a tweet comes out that says the wrong thing. Oh, that impacts the stock market. Okay, well, Russia, Ukraine, the values change, the Fed. Like, there's all these things that regardless are never going to be out of control. So I started looking at it like risk reward. I think it's Tony Robbins that talks about asymmetrical bets. And again, typically as risk and reward go up, like the more you risk, the more potential return. It's not always the case. And so there's sometimes asymmetrical risk reward where you don't take incremental risk, but the return profile, you can get rewarded still. And vice versa. There's some things where you take incremental risk, but the reward is very, very small. And so I started just looking at our financial structure and how a lot of people are investing their money and just saying, like, I don't like some of the ways that it's been done for the last 50 years. I don't want to do that with my own money, and what are my alternatives? And so that kind of led me into the world of
So if you're grading investments, right? I'm not a financial advisor. If you're grading investments, right, you might, on a risk factor of 1 through 10, right, a 10 being the highest, then definitely the reward you would want to be a 10, right?
Yes.
If you're willing to take that kind of risk, like everything's in buckets. So we have our high risk and low risk buckets. But if it's a low risk bucket, what you're kind of doing is you're taking a look at, well, what are the potential rewards in a low risk bucket? If the low risk bucket reward is only a 1, then maybe that's still a decent investment, right? It's stable, it's conservative, right? It's something, because you need to balance your investments diversified, right, through your portfolio. But if there's a risk factor of a 1 and there's a potential reward of a 7, I mean, that's kind of what you're talking about,
yes.
right?
Yeah. So imagine if there was, a risk factor of a 2 or 3, but the reward was still a 7 or 8. We'll compare that to a risk that's a 7 or 8 and the reward's a 7 or 8. Like, I'm going to take the one that's a 2 or 3 on the risk side, and I'm still going to get those returns. And so, again, I felt like
as a financial advisor, you can give those kind of recommendations.
This is not
in my position, right? If I tell anybody, everything's a 10 in risk, everything is highly risky, and all investments can potentially, be lost, right? That's the world I have to live in as a REIT runner, even though I believe in making lower risk investments with high rewards. So
disclosure.
Farmers, that's my belief that what they are right now. So
yeah, and I'll throw in the disclosure. This is not individual financial advice, but I mean, to be clear, like, I am licensed where I charge people, pay me to give them financial advice, and that's part of how my business is built. So I am able to opine on that. In an individual situation. Everyone's circumstance and situation is different. And the other part too is everyone's psychology is different. And so people could have the same fact and pattern, but the advice could be completely different because, again, like, success with investing is behavior. And so again, if there's a higher risk investment where someone can't stay the course during a market correction, okay, well, if they're going to take chips off the table at the wrong time, that's going to be the worst thing to do. So sometimes that psychology for an investor is huge as far
And
as what
chips
they
off the table at the wrong time is what a lot of people do.
Yeah.
And people who put the chips on the table at the right time, they win, right?
Yep.
If what's the No One to Hold 'Em, No One to Fold 'Em, The Gambler by Kenny Rogers, right? Am I saying the names right? Yeah. So I'm usually not in a music mindset when I'm doing these things, right? So it's fascinating though, because cryptos are definitely a place where people have put their chips in at the wrong time. I can't tell you how many of my employees or how many of our team or how many people that are around my circles have wanted me to, give them money to go invest in crypto, right? And what happens to so many people is they act after the moment, after the influence, after the market change, after the shift, and then they're trying to catch the market, and they spend so much time trying to catch the market that they screw themselves. And so therein lies the magic of putting the chips at the right time, is you have to move before the market moves. And if you get it wrong, then you get it wrong. But if you move before the market, it's the only time you have a chance to truly get it right. I know there's plenty of people out there that might have different voices or opinions on that. It's a good one. It's a good debatable subject. What do you think?
Yeah, no, I think it's huge. Like, are you being driven by fear, or are you being driven by greed? I would say,
Or by knowledge.
Or by knowledge, yeah. Fear and greed are both not good barometers to operate by. I mean, for me, like my story with crypto is like, hey, I believe in the technology. Like, I think blockchain technology is something that is changing and going to continue to change the world. Now, okay, how does Bitcoin, how does Ethereum, how does all those factor in it? I think we're so early in the game. Still, there's a lot to be uncovered. For me personally, I dabbled in crypto and I had some education around it. And my story was I had my crypto at the wrong exchange. Things happen and that money went like that and is gone. And, I look at that as like, okay, that was tuition. So now my strategy with crypto is I actually have a friend who's very knowledgeable in the business and has a technology background, knows how to secure it the right way, knows how to look as well as you can ahead of the curve. And I said, like, hey, I don't want to spend the time or effort learning all this myself or managing it. Like, I'm going to find, and this is really my philosophy with all of my investment, find good operators that can do and spend, the $600,000 a month to find deals that I'm never going to be able to get access to. And I'm going to understand them well, get comfortable with who they are as people,
our budget
and deploy.
for finding real estate deals is larger than any amount of money that people would normally even invest, right? And so, it's multiple six figures we spend on our budget just in deal finding. Like when we looked at crypto, I went and hired 2 full-time researchers, and that's all I had them do was researching the trends, the history, the market of crypto and those kind of things before we even touched it, with the fingers to gain knowledge and make knowledge decisions. But it's also part of that knowledge is principles. And I think when you have fundamental principles with investing, like for me, some of my real estate principles is like an easy one for one of my acquisition guys: never negotiate against yourself, right? If we make an offer, make them make a counter offer. Don't go and offer against yourself, right? I mean, I know that sounds like a simple one, but it's pretty important, right? We don't buy retail. It's just we absolutely refuse to buy retail. If I buy from real estate agents, sure. There's real estate agents that are selling assets that aren't retail in different ways, and so we don't buy retail. I'll fight and claw, and the last market was probably the hardest one in my adult lifetime to not buy retail because it was hyperinflation, right? But for us as a real estate company, we refused. Like I was talking but we were interviewing accountants, right? And I was talking to an accountant yesterday. I was interviewing him, and they were talking about their farmland stuff, and they're buying stuff at, $10, $12, $14,000 an acre. And I'm just thinking to myself, you guys are a REIT, and you're buying stuff at retail or above retail in a lot of ways. It depends on what they're buying. But I was talking to him, and I'm thinking to myself, we bought our last 3 farms for $3,500 to $4,000 an acre because, we're not buying on market, we're buying off market. We're looking at value add situations. And so every real estate property we look at has a value add. Where's the value we can add to it? Square footage, income, different things. And so those are principles. So with investing, what would you say are some great fundamental principles for people? Those are some of my real estate ones, but investing across the board, what are some fundamental principles?
Yeah, I mean, I think to me, one of the foundational things is where are you at stage of life? And so again,
So identify the goal.
Well, yeah. What's the goal? And then again, I look at it. If you get something wrong, do you have time to recover? And so that's very different from my parents that just moved into retirement, and what they have is what they have, versus myself, where I'm like, hey, I've got 30 more years of income earning ability. So I would say one, it's understand the season, where you're at, and what that looks like, and then the other part is where do you place. And there's all this talk around diversification. That's huge, but how much goes where? What does that look like? And so many people are like, hey, I'm going to be diversified. I'm going to own 20 different stocks.
It's like the term of leverage. What does leverage really mean?
Yes.
It could mean a lot of different things. And if it's clearly defined, it means something different than diversification, which can be just 20 different stocks, which isn't diversification.
Yeah.
It's diversified stocks, but it's
Yes.
not diversification.
Yeah, and even stocks, like I own 20 different stocks. Well, they're all financials. They're all going to act similarly. Okay, well, it's 5 financials and 5 industrials and consumer staples. Like that's different. I'd still say that's not diversified because you're not diversified across an asset class, but that's better than the 20 bank stocks. The other part I would say for investors is, and this has been a journey for me, realizing there's things that I'm believing and acting on that aren't true. And like I'm at a different place than where I was 10 years ago, and like I've got a better grasp on certain ideas. And so again, I think investors are their own worst enemy a lot of times. And so I would say, like, where are you taking your information from, and like who can you trust? And like I think that who can you trust is a huge thing, because again, like I'm never going to be able to put enough time into medical knowledge to be able to have the same perspective or understanding as a doctor. It's just not what I'm going to do. So I can spend all the time researching WebMD, whatever. I'm never going to get there. I look at financials the same ways. Like there's people, let's just talk about someone who's got 20, 30 years in the business and has done 1,000 hours. I mean, that's time where they've got perspective. And so again, finding someone that you can trust. I like to work with people that I would say have the heart of a teacher. Like, people don't have to always understand the ins and the outs of everything that is being done within their investment strategy, but I want them to understand, like, here's what we're doing and why. But what voices are you listening to? And again, I meet a lot of people that CNBC is on all the time, and they're getting driven by, the media and what's happening, and that's impacting and making the decisions. So I think understanding the season of life, where you get information, and then how are you deploying it, like is a whole nother piece. And again, like growth, income, stability, there's all these different stuff. Where you're at and kind of the overall financial picture, like once you kind of reach a certain level, like I look at, like, you've got the foundation, the walls from your house, you've got options as far as like, hey, am I going to build this brick? Am I going to build this, wood frame? What finishes am I going to do? Like there's a lot of that stuff where I'm like, hey, in my view, comes down the preference around that. And so, what does that look like? But I think it's finding a good team around you as well that can help you on the journey. And then ultimately, if you're in a scenario where you can't make the decisions, like, what does that look like where someone can step in and kind of help you moving forward? I don't know if that answers at all what you're looking for.
It never answers at all, right? And I think that's a great point. I was just thinking, like, nothing answers at all, right?
Yeah.
I've been in the real estate game since 2006 and made money in it since then. And, I was on a podcast, 2 days ago with a 1031 exchange company, Ricky Guerrero. Did I get that name right, you guys? Yeah, Ricky Guerrero, great guy, great knowledge, good information. And I'm like, I've known 1031s. I've helped conduct 1031s. I've been a part of 1031s, right? And he's sharing me some 1031 information, right? If those of you don't know, 1031 is essentially when you sell an asset, when you sell a piece of real estate, right? Can you reinvest that money into another asset and not have to pay capital gains taxes, in that immediate moment, right? And there's other things I've learned about that over years. Like an opportunity zone fund is something I learned about because, a pretty wealthy investor of ours sold part of his company, and he said, Dutch, open an opportunity zone fund, or I'm going to invest some money with someone else besides you because I don't want to pay my capital gains. I want it to invest, and I want it to grow. So, and that was, 2 years ago, and now I'm very familiar and very in-depth with him. But so the journey of the knowledge part of it doesn't change, and then the laws with the IRS change too.
Yes.
And IRA laws and 401k laws change. So, I think there's never the only answer, but I think there is a lot of fundamentals that you've shared today that are important.
Yeah.
And what I'm going to do actually is I'm going to take our podcast today, and I'll put a link into the chat for people. I'm going to take every little thing that I think is a nugget, and we're going to drop them into a PDF, a set of notes for people from the podcast. I think that'll be a good giveaway for people, something people can download. I'm not asking for your email address or something. We'll just put a link. You just download it, right? And so yeah, I think there's some great nuggets here.
Can I share one thought?
Go ahead.
Yeah, I mean, I think what you said just illustrates the truth that I was talking about, where you've been in real estate for how long? 15, 20 years? Mm-hmm. And up until recently.
And kind of born into it too.
Yes.
Because as a kid, my parents were agents, they were investors. They owned apartments, then lost apartments, and they owned houses, then lost houses. They were great at, getting into things and getting out. But most of my life in different ways.
So you've been doing this a long time, second generation, and up until recently, there was something that you were believing around 1031s that you thought was true that wasn't.
Yep. And
so again, like I would challenge everyone. We all have that same stuff, and so again, you've got to filter information, but also be open to say like, hey, there's something that I'm believing today where I may not be lined up. And I think once you approach it with that,
every investor that ever came to me with a 1031 said to me, and this is just one of the things I learned, was you have to do one-to-ones, right? So if you sell a property, you have to invest into one property, and that's what it was, and that was wrong, right? You can sell a property and then disperse that and invest into 3 properties. You can sell a property and take part of those proceeds and invest it into a property and then pay taxes on another different portion of it and take money. So there's these hybrids, right, with 1031s. That was enlightening to me, because that wasn't something that any 1031 lawyer, or which they probably knew it, but they had never said it to their people. Maybe because it makes it much more complicated. Mm-hmm. I don't know. But so yeah, those were just some of the nuggets. Yeah, but I never stopped pursuing. I think that's whether you're day 1 of building wealth or day 10,000 of building wealth. 10,000 would make you pretty old. Was that 30 years? No, I don't know what that is. Yeah, at least 30 years, 30, 40 years, 30 years. But whether you're on day 10,000, it's the pursuit never ends. I think that's important. I mean, you're still pursuing it.
Yeah.
I'm still pursuing it.
I think I'll pursue it till the day I leave. And it's something that's enjoyable, and I also think we're designed for creation. We're designed to walk things out, and like again, I can't tell you how many people I've worked with that have moved out of a career and into retirement, and then they're back into something because we're just designed to do stuff. And so I look at my wealth creation, my wealth journey, and I'm like, hey, it's going to look different when I'm 80, but I still want to be involved. I still want to be doing stuff. I still want to be teaching the next generation or the generation after that. And I'm very grateful for people in my life that I've been able to look to and say like, hey, 20 years from now, I want my life to look like that. And how do I kind of take the insight and the knowledge and the lessons that you've learned, and if it's a bad one, like not go down that path. If it's a good one, kind of follow after that. So I'm very grateful for that. And down the road, I want to be that for other people as well.
What are your watch outs for people? Like what do they need to watch out for? I think there's a lot of, so for me, something I, have struggled with at different times is, we're a very regulated, very audited, we're a security, we're not, non-traded, we're a public company, right? So to get to this point, took forever.
Yeah.
And took a lot of work and took doing things a certain way. And then I go next to the, Los Angeles Real Estate Expo, right? And I see a guy with a sign on a booth talking about, percent returns and doing stuff illegally, right? But percent returns and different things and then somebody's cousin. And so, for me, that's always been a frustration for me, because the difference between what we are and what that is are two different worlds. So what are your watch outs? What are your watch outs for people?
Yeah, I mean, and I think this is prevalent in it's prevalent as well in the stock market. I think as you move into private deals, it becomes more. I've always told people that if there's like a fear of loss where you've got to do it today, or you've got to do this in the week, and
absolutely,
that's a red flag. And I always tell people, like, there's always going to be a deal, and there's always going to be something that makes sense. It's not going to look exactly the same, but the timing has got to be right for you, and you've got to be comfortable enough within it. And I think, that's a big thing where people got in trouble with crypto. It's like, hey, this fear of loss, like, hey, everything's going to the moon, and like, I got to jump on. Or GameStop. I mean, I watched the Netflix documentary on GameStop, and it was just eye-opening to see, like, the herd mentality, like people get in, and then like the carnage that ensued around that. And a lot of that was because there wasn't that
And
check.
people don't realize that there's people that are intentionally creating the herd mentality to take advantage of it.
Yes.
And so if you're following where everything's being pushed, then you're following. And one of our investors said to me once, he's like, Dutch, how do you see things, or how do you know what to do or what to go through? Well, I said, well, I have a doctorate in BS, right? And all the years of working with thought leaders and gurus and all the years of consulting, right? There's so many that were good and so many that weren't. And so even when I look at the news, or I read the headlines, or I see, the Republicans pushing something, or the Democrats pushing something, or I see, the vaccination world pushing something, the non-vaccination world, like I can read between a lot of the lines, and a lot of the BS. And if you're following the push, there is a push. If you look at the AP, you look at different things, there's pushes, and it'll come from one side, one from the other. If you follow the push, you're always going to lose.
Yeah.
You're always going to lose.
Yeah, so again, like I think if you're emotionally experiencing that and feeling that, there's just a pause to stop and recalibrate, and then look at it, and maybe the answer is no, or maybe the answer is not now. And then once you're not experiencing those emotions, because I mean emotions cloud our decision making in everything, and investing is no different. But I would say specifically in like the non-publicly traded space, like that's a big deal. And then as you get into networks and connections, there's always someone that's got this unique thing. And like I tell people, like, don't. And for me, like I look at tuition, like there's been stuff where I looked back and said, oh man, I made the wrong decision, or like I was influenced by that. And like again, it's tuition. The other thing I would say is, again, like the analogy of like poker, like as long as you have a chip in a seat, like you're still in the game. And so what does that look like when it comes to investing? Like if something goes against you, it's like that bad beat. Hey, I had a 99% chance of success, but that 1% takes you out. Like you've got to measure your chips in a way where you can survive, because really staying in the game is one of the biggest things. And so that comes down to risk management, to diversification. And I personally place like concentrated stuff, and like Warren Buffett is another one to say like, hey, we're going to place concentrated bets in things we know and understand. On the flip side, though, like, hey, let's take a stock that's run up. Like, at what point do you remove risk and take chips off the table? Or crypto is another thing. Okay, well, I just 20x my money. Okay, well, it can go back down and you can lose 95% from here. So what's the discipline as far as like measuring your investments?
And I look at things in a worst case, best case, most likely scenario. Yeah. All investments, I look at those three things. And I say, worst case scenario, can I get my money back? Worst case scenario is there's still an asset here, right? When I invest into businesses, to me the risk factor, no matter what the business is, inherently goes up for me. It's probably because I'm a child of the 2008 crash, in the sense that like that was my first time in my life I was really investing, and I looked at 100-year companies that disappeared, and then their assets went over to other companies, but at least they still had assets, right? But when I invest, I always look at my piece of real estate, and I say, what's the worst case scenario here? What's the worst thing that can happen, right? Yeah. And if the worst thing is that there's a sinkhole to the center of the earth, and my property disappears, well, at least what's my insurance, right, as my backup on that piece of property, and maybe I won't make the upside that I was planning on, but at least my insurance will cover my initial investment. I'm okay with that being my worst case. And then my best case, obviously, like you were saying, it's all about looking at, what are the different potential rewards from the different potential investments, and weighing that decisions. But what people struggle with is a small amount of data.
Yes.
And so they only see one investment, or they only see one asset. You'll never feel the pressure from someone pressuring you to invest if you're looking at a large amount of investments, because you get it. But if you're only if you only happen to get referred to, your cousin Joe's, friend who has this company that has some tax liens, or has some stocks, or has some crypto that you could invest in, and that's your only perspective as your cousin Joe's friend, then that person can pressure you. Yeah. And they can create fear, and they can create scarcity. Mm-hmm. But if you have your cousin Joe, and I'm not saying that person couldn't be good, they could be good, but you have your cousin Joe, then you have your financial planner, and then you have other resources that you've gone and found yourself, alternative investments to invest into, right? And you have this variety. Now you have a lot of different things, or you have 10 Cousin Joes to look at. Now you can start to have the ability to discern between some of the different investments, and people like that seems really overwhelming. What would you tell them?
Yeah, I mean, just perspective and having conversations and going slow. And again, you don't have to understand everything, but I think what you're trying to do is find things that meet your preference and risk profile around that. And so, I look at, okay, to do a Reg A, what are all the hoops you have to jump through where there's checks and balances and oversight around that? Or let's talk about a custodian. Okay, in order to get on a custodian's platform where you can deploy capital through that, like, what does that look like? There's other eyes and ears on that have different perspective, and really their goal is to protect investors around that. So I think, again, it comes back to like the source and like where is that starting point as far as looking at investment opportunities. One of the things for me that's been eye-opening is if you look at like the endowment model as far as how these big endowments are investing their dollars, what are they putting it in? It's not just stocks and bonds. There's farmland, and there's timber, and there's probably oil and gas, and there's private equity and all that stuff. And you can just Google like Yale endowment model or Harvard endowment model and see like it's public information.
Have you seen successful investments in oil, gas, gold mines? There's something that I've always found, like in my research, right? I've always found so much crap. Right, I've always struggled with wanting to put any money into those. Have you ever found any good ones in that arena? And I'm not talking about just buying gold as a commodity. That's a different thing.
Personally, it's not anything I've invested in or looked really deeply into. For me, like, there's a few asset classes where I want to understand them intimately and then find like good operators in that space and like hitch my carriage to that horse and go. And like that's the decision that I've made because I feel like, as I understand the decisions that are being made, as I understand who's making those decisions, like things aren't always going to go right. And like one of the biggest things I see, let's call it in the non-public space, like a buddy of mine sent me a slide deck for a new startup that looked great. But I said, like, there's so many potential provisions in this 100 pages of documents, you're never going to find all the gotchas. And so again, like if I don't have a relationship and trust that person, I probably would not put my own capital in, even if it looked like a really good business opportunity, because I want to understand who's making the decisions, and if and when things go wrong, are they going to look at taking care of themselves at the expense of the investor, or are they going to look to soften the blow? And so, that for me is huge. And so oil and gas, I've not found anything where I've been comfortable.
So there was a moment for me in my career as a entrepreneur, as an executive. We were consulting a company. And I kid you not, I had literally just read Richest Man on Babylon. And we had helped consult this company, which for us was we would have outsourced services they would use. And this is like 2014, I think, roughly. We've been consulting this company, and on a Monday they hired a new CEO. And he flew out to our offices in California when I still lived there. And he met with us. And at the end of the meeting, he walked away and he says, I've made a decision not to use any outsourcing services any longer. And the day after that, I had to fire 22 people. And in that moment, I go and it's like, I can't believe this. Like, I had such a relationship with the founders. We've built this together, right, over the last 18 months. Like, I was, I don't think my heart could have crushed any more than when you've had to lay off those people, right? And good people had done nothing wrong. I had fired people before, but I never really fired people who had not done anything, And in that moment, I'm sitting here thinking to myself, so I go into a deep dive into this guy who's a CEO, and I'm looking at it, and I'm like, he's never run a successful company, and the last 3 companies he's been part of are all out of business, and then that's eaten me up, even more. And so I send this letter off, to the founder. I'm like, I understand the decisions, we respect it. I just want you, to be aware of, this move's gonna hurt, in the long run. And I look at that when you're looking at startups, and it comes back to whether you invest in a startup or not. Like, it doesn't matter how cool the idea is, how cool the concept is. It doesn't matter how good, right? Real estate is a vehicle for people to invest into, and there are thousands and thousands and thousands and thousands of people millions of people investing into real estate in America. And but the difference between proven track record, history of success, and being successful at what they're, just because you were successful at running a tech company in Silicon Valley doesn't mean you're going to be successful at being a real estate investor, right? And so for me, with those startup companies, I think one of the most important thing as people do their oil check on founders is whether they have a proven track record of success in the niche, right? That they're very great at, right? I had a proven track record and success and history in info marketing, right? In the thought leader space, especially the real estate thought leader space, consulting real estate companies. But my own portfolio of real estate is where I had the real estate portfolio, right? But then I had to grind through one regulation, then another regulation, and then another regulation to finally get to a Reg A. And so the difference between that journey and someone brand new is something I think I constantly, battle with when it comes to investors' ability to discern between good and bad investments. As a financial advisor, how do you change someone's mind when they're so bit down on an investment that is like not meeting all the check boxes?
That's a really good question. So I would look at it that if I'm in a relationship with that person, it's different than if it's a prospect. And like sometimes I'll make the decision with this person, like I understand what you're saying and why you're saying it, but the reality is like you're taking information and you've got a false belief around that. Is it worth my time and effort to try to change that opinion? Sometimes yes, sometimes no. A real life example is a widow I work with, and her husband had passed away, and she was still relatively young, probably in her 50s. But the portfolio, when I took it over, her husband had bought everything. And so she had emotional ties to every single stock in there. And I remember having all these conversations with her around, you're telling me you don't want risk, like this is all risk stuff. And you're telling me like you want to do this, but you're not allowing me to do anything. And I had to filter to say like, hey, if here's the goal where we're going and we're right here, are you going to at least take one step in that direction? And if you're going to take one step in the direction, even if it's a way slower pace than I would want, I'm going to continue working with you. If you ever stop and we're not going in the place you're telling me you want to go, like that for me is like we're probably not right for working together. So I would say sometimes it's just a little bit at a time. Other times just look at it and say like, hey.
So hard for entrepreneurs to walk away from clients.
It is.
And what a lot of entrepreneurs don't realize is the clients you walk away from are the ones that will make you the most amount of money. And like that, for me, the first time with our inner circle and our rules with our inner circle, the first time, I forced refunded, right? A member, I was like, man, we're giving up, a chunk of change right there, and also potential future assets under management. But then I went and looked at like 3 or 4 that I should have done that for. I looked at the headache and the time and the effort and the resistive, battle with that. And I said to myself, all right, we're going to do this the next 2 or 3 times we feel this way. And now over the years, we've kept that policy. And I'll tell you, the getting rid of the small headache, getting to, so that, and not worrying about, that money is huge. Yeah. It's huge. And I carry that over like in like our real estate business and anything like, we do everything impossible to avoid a battle or avoid a war or avoid a confrontation or avoid an unhappy customer, right? Everything possible because it's just not worth it. Yeah. It's just not worth it.
And again, that illustrates my point is like to filter like when things don't go the way you're supposed to, like how are you treating that person? Like for me, like understanding that and seeing like, okay, they're going to take care of someone and it's not just like, well, these are the terms and like, go pound sand, like that to me is huge. And so again, if you can understand how those decisions are going to be made or it to me comes back to character and integrity, the character and integrity of the founders, like of an organization, like that gives me a lot more confidence around that. But no, I think it comes back to just people taking advice and actions and, if I can continue to help them down the path. I mean, sometimes this is a long, long journey to get people from where they need to be to where they're wanting to go, similar to health. Sometimes that journey is years to get there, and if we can kind of walk in the right direction, even if it's not at the pace that would be optimal, like I'm probably going to continue to help educate and I don't say change a person's mind, but enlighten them around why we're doing what we're doing.
All right, brother, that was nails. We hit it. You know, I think you gave so many nuggets. I think it's one of the best, you know, hour sessions we've done with anybody as far as how many nuggets people can pull out of it. So I appreciate it. I appreciate you taking the time, and I look forward to what I would love to see, and I haven't ever asked for this in one of our podcasts, right? I would love to see all of you who watch it, like who are part of it, right? Whether it's you see it on YouTube or you see it on Spotify or wherever else, anywhere you can chat and throw some future questions. Nate's going to come. I'm going to have Nate on again, right? And some things about money, financial advice, right? All of you know that I spend a great deal of time in the relationship with money. And it's a fascinating dynamic because there's the processes, and then there's emotions, and then there's, you know, how you're raised, and there's so many components to it. And so feel free to throw some questions in the box, and I'll make sure the next time we come in, we kind of load those up and bring those with us. But Nate, thanks, and I look forward to the continued prosperous future with you, brother.
My pleasure. Thank you so much for having me.
Cool. You guys got it? Good? Good. Give me a clock on a wall somewhere,
Oh, I
please.
know. I need to do that. I know. I was trying to.
Yeah.
Did you see our note on there? Call at 3:30. We
Oh,
typed it up.
whatever the calls are, they can always be delayed. But
Okay.
unless it's